In this video, I will review the latest on Palantir and say to the end, I'll let you know if this is a stock I'm buying or selling. If you don't know me, I'm Sean Tepper, the founder and CEO of Tykr. If you're new to investing or want to get better at investing, rest assured you're in the right place. Here at Tykr, we help investors buy and sell stocks with confidence. All right, I'll touch on three things. Number one, I'll give you the latest news on Palantir and my opinion on that news. Number two, we'll dive into Tykr and actually look at the ratings within Tykr. And then number three, I'll let you know if this is a stock I plan to buy more of or sell. All right, let's get into the report. So the key metrics that earnings reports usually hit on would be EPS and revenue. The number one most important metric on the financial statements would be EPS. That's essentially earnings per share. If you don't know what that is, that's essentially the profits of the company. After that, you have the revenue. So the estimate for the EPS this recent quarter was 13 cents, and they reported 13 cents, so it matched. That's not really good or bad. It's just pretty much neutral. Now, if you have a situation when you estimate 13 cents and you come in at 10 cents, you've got a problem. That's when share prices can go down. On the flip side of that, let's say you estimate 13 cents and you come in at like 18 cents. That could be huge. That's when share prices will take off. So that's typically why at earnings reports, share prices go up or down. It's that EPS estimate. Next up, you have the revenue estimate was 863 million over the most recent quarter. They reported 884 million. So that beat the revenue expectations. So that's a good sign. Next up, 71% jump in commercial business, US commercial business over the recent quarter. And then here's one of the negatives. So I found an article here from MarketWatch. This was when the share price fell abruptly after the earnings report. Well, the situation there was sales overseas, international sales were down 10%. Now, a lot of people were freaking out like, uh-oh, this is the turning point of the stock and Palantir's share price is going to fall. My answer to that is no. The headwinds are really a result of the tariff negotiations or the tariff war that's going on as we speak. Not just hardware, but software companies are hit. So Palantir falls in that software category. So that's why they're headwinds overseas, which makes total sense. Most businesses are facing that. So that's why the share price took a small hit. There was also a comment here from an analyst. Brent Thill said the valuation of Palantir is irrational. Well, this is a good segue. We're going to get into that valuation here right now. So this moves on to point two, which is let's take a look at Tykr and see what Tykr has to say. Now, if you're not already using Tykr, really just cuts through the clutter so you know if you're running into a good stock or a bad stock. So transitioning to the valuation of Palantir, before we go there, I want to show you something in Tykr. This is my watch list. You can see that stocks in Tykr are either on sale, watch, or overpriced. Only about 15% of stocks make it to on sale. That's very difficult to achieve. The majority of stocks in the market are actually overpriced. This is why if you own an index fund, ETF, or mutual fund, the majority of the stocks in that fund are actually holding you back. That's why we teach people if you are looking to build your wealth, you should be in about 10 to 15 stocks. If you don't know this already, Warren Buffett made his first million by investing in 10 businesses or less. Then over time, he diversified. For example, Berkshire Hathaway, his company, owns about 40 businesses, some private companies, some public. Anyway, let's get right into Palantir and see the valuation. All right, so Palantir, right off the bat, they are on sale. And what we're going to do here is we're going to walk through a manual, the 7. It's the 7 key steps to really determine if a stock is good or bad. The goal is to get 5 or higher. Now, we can click on the 7 tab. We're not going to do that, but that is essentially the easy button to save yourself time. So first off, this stock is on sale. All right, looking good. Next up, we have the score here in the hexagon. The higher the score, the safer the investment. That score looks at the overall financials. So looking at the revenue, looking at the net income, looking at the EPS I touched on earlier, also looks at free cash flow, debt, equity, and a few other lines. So 77 out of 100, that's really solid. The goal is to get over 50. This is very rigorous, so getting over 50 is good. Then we move on to step 3, which is the margin of safety. The higher the margin of safety, the higher potential returns you can make. So check this out. This is the valuation. 74% margin of safety. Share price in Tykr as of the recording this video, 118. But the fair value, look at this, 455. There are multiple ways to calculate the fair value. We created our own, really inspired off of Phil Town's calculations. And if you're curious, you can go to the projections tab. You can see 4 different valuation metrics stacked up against each other. So we got ours, the Tykr valuation, Rule 1, the Graham fair value, Ben Graham, and then some people like to look at discounted cash flow. Another way to look at it is you can kind of toggle between the years here into the future, see what those projections look like. Kind of a fun feature. Anyway, so far looking really good. 3 for 3 on this 7. Then in the middle, we have a tool powered by OpenAI. This is the 4M Confidence Booster. Essentially what this does is it looks at more than just the numbers of the business. It also looks at the, and I'll show you my screen here, the 4 M's. You got the margin of safety. That's the math part. The meaning is the business model. How scalable are the revenue streams? Then you have the moat. How does a business compare to other businesses in the same sector and industry? Then you have the management. That's the track record of the CEO. Doing homework on all 4 M's could take you hours, if not days of research. We reduce it down to seconds with this tool. So we can see right off the bat, we don't even have to go through it. This is crowdsourced, so when other people complete this score, we see them. You can actually see the names down here. But yeah, this is a 71. The goal is to get over 80. This would be alarming if you saw 59 or less. In fact, we'll click here. Let's go to the next tab. You can see the ratings we're going for. So high confidence in the stock is 80 to 100, moderate confidence 60 to 79, and then low is anything 59. And then low is anything that's 59 or lower. All right, so let's close this. We don't have a 4 for 4 so far, but let's keep going here. Next up, this is step 5. 5-year returns. Now, we do know that past performance does not guarantee future results, but we do like stocks that consistently beat the market over 5 years. A good benchmark to memorize is 80%. S&P 500 typically returns about 80% over 5 years. We can see in this case, check this out, this is over 1,000%. Palantir, a little bit of an outlier. Not every stock is going to deliver 1,000% over just a few years, but in this case, quite impressive. All right, we'll keep going here. We're almost done with the 7. Next up, financials tab. As I mentioned, go right to the EPS. And we want to see 3 quarters in a row where it's increasing. Your profits are increasing. In this case, we can see 2 quarters in a row. We go from 3 cents up to 9 cents. That's a huge jump. But you can see here as 6 cents. So we don't have 3 in a row. That's okay. Still 2 in a row. Let's keep going here. Last tab, earnings calendar. And we did match it. You can see, let's go back in time. We have our estimate and a reported. Let's see the last miss. Looks like 2022. So consistent track record of beating his returns. So we'll see what we get here. Let's click on the 7, see what our score is. We've got a 4 out of 7. So again, like to be 5 out of 7. Now in my case, this leads up to 0.3. What am I doing with this stock? In my case, I've been a long-term Palantir shareholder, and I'm actually still buying more. I really look at the green here. We've got an on-sale stock, score 77, margin of safety 74. That right there gives me enough confidence. In my case, I'm going to continue buying more. I also know the business model really well. This is essentially data analytics, just to simplify, data analytics coupled with consulting. So when you have a consulting team that goes with the software, that creates a lower churn, because when a customer has complaints or issues, instead of them getting frustrated, you get the consulting team with them that can say, hey, noticed you're having some problems. What can we do better? How can we help? They're right there to get around that. You don't always have that with a lot of software platforms. People get frustrated and they churn out, or in other words, leave. But anyway, that's what I plan on doing with Palantir, long-term shareholder, and we'll see where it goes from here. All right, if you want to know what stocks to buy and sell, you can join Tykr for free. And of course, don't buy and sell stocks based solely on what you hear. Only buy and sell stocks that align with your own personal financial goals. Thanks for checking out this video, and we'll see you in the next one. Bye for now.